I'm a big believer that there's not enough gold in the world to cover the amount of paper that has been sold on gold. So if we're getting a little bit nervous and you get a little bit of short squeeze, that brings the professionals in to buy. And that's, I think, what they're doing.
This is Kaiser Johnson with Liberty and Finance. Right now, you can swap any uncirculated 1-ounce gold coin or 1-ounce carded bar for an MS62 $20 Liberty or St. Gaudens with no extra premium whatsoever. Just ship us your gold coins or bars and exchange them for MS62 numismatic Liberty or St. Gaudens at no extra cost. Call us for details.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Todd Bubba Horwitz. Todd, thank you so much for joining us today.
Elijah, always great to be with you. Lots to talk about, I'm sure.
Definitely. And we do have your affiliate link to Bubba Trading in the description of this video and the code there for our viewers who are interested. We'll talk a bit more about that at the end of the interview. But I did want to discuss first with respect to the gold market. We continue to see gold rally higher and higher, almost to 3,000. We're rebounding here on President's Day a bit, back above 2,900. I think it's kind of riding that line. Your take on what we are seeing right now?
I think if you want to, gold, I think is great. We said all along, the few times we talked in the last 6 months, that we fully expected to see it continue to rally and look for over 3,000. I would expect here probably a little bit of a pullback from a trading standpoint. It's a little bit overbought. It's a little bit overdone. But I think it's telling everybody that inflation is still rising. And of course, we saw the numbers last week, CPI and PPI, which indicate that we got higher inflation. And, I believe in President Trump, and I think he's going to do a lot of good stuff, but there's going to be some pain to start with. And the inflation is not going to go down until we get everything back in the pipeline, so to speak, especially when it comes to oil, because with the oil, that's a big percentage of the inflation. So I think gold is riding the inflation wave. It's riding the safe asset play. A lot of reasons for gold to go higher. But as I said earlier, I look at it now and I would expect a pullback. And I wouldn't be surprised if we had a 7 or 8 to 10% pullback in gold, although I still like it and I would be looking for opportunities to buy it. I think that from a standpoint that it's basically going up parabolically, those markets don't usually last, and we should see some sort of a pullback here.
What kind of a pullback do you see? It sounds like long-term, you're still looking at higher prices, but are you looking maybe a couple $100 or less than?
I could see up to 10%, which would be almost close to 300. I'm not saying it'll go that far, but I could see that happening. I have a target that I'm looking for, which is actually 27.13. Okay. But it doesn't mean that I can't change my mind in the next couple of days. It depends how the markets react. When markets go in a parabolic direction, they have a couple of ways to resolve it. Either they continue to go parabolically higher and eventually collapse, as we saw the markets in the 90s, or they will go in consolidation and then either rise or fall from there and change directions, or they'll pull back. The most healthy, the best I could see for gold there is a straight pullback here, and it could be 5%. Again, I've got a target of 27.13. It wouldn't surprise me if we hit 3,000 first. It wouldn't surprise me if we had one big spike. We saw Friday, you had a $60 sell-off or so. It wouldn't surprise me to see a run to 3,000. Whole numbers, big whole numbers, especially when they're associated with new all-time highs, are like a magnet. And we're going to hit there. Whether or not it's before we go down or after that, I don't know. But by the end of the year, I would certainly not be surprised if gold rose another 10 to 12% from where we're trading right now by the time it's done. So I would use sell-offs as a buying opportunity.
Now, in the gold market, I've been talking with a lot of guests about this strange phenomenon we're seeing, where we're seeing different signs like the price going up and also huge outflows from London to the COMEX that are signaling that it seems like the big money or the insiders are accumulating precious metals. But on the retail side, the smaller money, right, the average public, it seems like selling more because we're seeing a huge reduction in the retail premium above the spot price. So your perspective on this dynamic we're seeing?
Well, again, you look at the markets you look at the equity markets over the last couple of weeks. Now they've been higher. Okay. Last week, the previous 2 weeks, we had those 2 Monday disaster days. That creates panic. And most investors do what we would call the wrong thing. Okay. they sell their good assets trying to hold on to the crap. And of course, that would coincide perfectly with selling their gold, which they cannot help but be profitable on gold. So they like to take the winners off the table when that is exactly backwards. You want to let the winners continue to run until they tell you that they no longer can run. But that's why the average investor usually loses their, you know what, because they want to hold on to the dogs, the ones that are going down. And there's an old saying, buy the strong and sell the weak. Okay. It doesn't matter. Stay long the strong and get rid of the weak. But people don't do that. They do the exact opposite. So it makes a lot of sense to see people selling gold because it's been one hell of a strong asset and it should continue. But again, when you're dealing with human psyche, you're dealing with psychology, people don't want to take a loss. They don't look as their overall net worth. You know, my net worth is $1 million. Okay. I'm not looking at it as a package worth $1 million. I'm looking at each individual asset. And I'm like, well, this one's losing. I'm going to hold it because it's going to come back. This one's really strong. I'm going to sell it because I want to take the money. Completely backwards thinking, which is very common in the investing industry.
Definitely. I mean, it does seem like the public maybe is going for the more risk on assets at the moment, but would you say it is correct that the insiders and a lot of the people in the know are maybe going towards safety?
Well, I don't even know if you want to call it safety. I think it's a great play to buy gold here. I mean, you look at Trump's, finance guy, St. He's a gold bull. Okay, there's your guy. You got Ron Paul. You got a big thing now talking about let's go audit the Fort Knox. Okay, which we haven't done since 1974. Okay, you got a lot of reasons to believe that gold is going higher, along with Bitcoin and cryptocurrency, because the new director is a fan of both. Okay, so again, I don't think that it's necessarily a safety play. Could be a currency play, and of course, we always hear about, well, the dollar's too strong and gold should be going down. Well, guess what? The dollar's going higher and gold is going higher. And at the end of the day, it's a perfect hedge. It's a perfect roundhouse to do that and use gold. But gold may again be indeed used as a currency once again, and I think that's an issue. And again, when you listen to St. speak, you can tell that he's a gold bug, and I think that we're going to continue to see this rally. And the last thing is I'm a big believer that there's not enough gold in the world to cover the amount of paper that has been sold on gold. So if we're getting a little bit nervous and you get a little bit of short squeeze, that brings the professionals in to buy. And that's, I think, what they're doing.
Now, mentioning, there being more paper than the physical metal out there, do you think that do you think the outflow from London and into the COMEX has to do anything with that?
No, I've always believed that they sell more paper. And of course, because, how often does somebody call their paper, right? How often does somebody go, I want my shares of gold? It's like you all remember the silver certificate, right? The dollar bill used to be a silver certificate. You could take that and claim $1 silver dollar at the bank, Morgan silver dollar. Well, I think this is the same thing. And there wasn't enough silver dollars. I don't think there's enough gold. I think that is an issue because, of course, these markets continue to trade. They continue to trade on paper. And when it comes down to it, it's like a run on the bank. If everybody said, I want to cash in my paper gold, my futures for actual physical gold, I don't think there'd be enough.
Now, when it comes to Scott Bessent, and we have talked about this before, and it's great that he got confirmed, right, as Treasury Secretary, being, it seems like, sound money oriented, or him at least saying that gold is his biggest position on an interview a while back. So I guess that's quite encouraging. He's saying that we are going to be monetizing the asset side of the bank's balance sheet, which was interesting. He said that in the Oval Office right next to Trump, and a lot of people are speculating what that might mean. Your take?
Well, I mean, banks are very tricky, and banks are really, they're like a cartel along with the Federal Reserve. I mean, you think about banking as a business model. They can borrow money from the Federal Reserve on the Fed funds rate, right? And we've seen that over the past 6 months, the Fed funds have been cut 1% or 100 basis points. But if we go back to September 18th, the original cut, the 10-year notes were trading at 3.5%. The Fed funds rate got cut, which means that the bank, if they don't pass the rate cut off to the consumer, the banks are making more profit. which is exactly what has happened. So move the clock forward. We're 100 basis lower at the Fed funds rate, which does not help you and me, the consumer. The banks don't have, just because they got a rate cut does not mean they have to cut the rates for you, the consumer. So now the bank's borrowing rate is 100 basis points lower. The bank's lending rate is 100 basis points higher, saying the banks have got a 200 basis point extension or a raise, okay, to lend money. Now, again, the other problem is that when they borrow money from the Federal Reserve, okay, they can take that money and take that liability and turn it into an asset and then lend out 10 times the amount. So I think what Besant is saying is no more. You cannot do it that particular way. I think that that's the problem. And that is what's created the banking problems we've had over the last 100 years have been directly correlated to the banks maneuvering, because knowing that they had the Federal Reserve to bail them out. Okay. And I think that Besant is saying enough, where the Federal Reserve is not going to bail you out if you continue at this particular rate of basically printing new money. Because when a bank lends out at a 10-to-1 rate, okay, called fractional banking, they are actually creating new money into the system.
So that would be a dramatic change to how the banking system works. I mean, what do you see the alternative being?
Well, I mean, how about if we just follow what the original laws were before the Federal Reserve was put into play? Okay, the Federal Reserve is nothing but a cartel, okay, owned by the banks. I mean, why don't we just do, if you remember, well, you may remember, really young, and I'm young, too young to remember it as well, but the original gold to silver ratio is supposed to be 15-to-1. Okay, it's now 90-to-1. Okay, the banks were supposed to be able to lend on assets that they held, okay, which in those days was gold. Okay. In fact, there are stories going back, if you've read The Creature from Jekyll Island, that they used to take rocks and paint them gold, throw some real gold on top, so it looked like they had more, so they could lend it out. Okay. What Besant, I believe, is saying is that if you're going to lend out 10-to-1, you better have the assets in your vault to lend out that 10-to-1. You can no longer lend out on air, or no longer take a loan from the Federal Reserve, take a liability, spin it through accounting, turn it into an asset, and then lend out $10 million.
I guess that's quite encouraging for, all of us who want more sound money in the system, or at least a more fair and honest banking system. When it comes, there's also kind of some talk about auditing the Fed as well, with Elon Musk and the Doge committee, possibly, bringing in Ron Paul in this situation. Your take on the possibility of that and what that might mean for the system?
Well, I love Ron Paul. I love his idea of ending the Fed. I think the Fed, as I said, is a cartel. I mean, they are a bunch of thieves that met on Jekyll Island, okay, and the Paul Warburg, Rothschild family, J.P. Morgan, and of course the Rockefellers. And we all know that a lot of those guys came out of the railroad business before the Fed, and it was a scam. Okay. And the Federal Reserve is more or less a scam. They are not anywhere near their mandate. The original mandate was jobs and price stability. They were not meant to manipulate interest rates. Okay. They were not meant to make it better for those who have money to be able to borrow money. They were meant to create stability. And they did not do any of that. We are not supposed to be bailing out a business that goes bad. In the true capitalistic system, people go out of business all the time. If somebody else comes in and takes their place. So I would love to see Ron Paul come in. I would love to see, they're never going to end the Fed, or at least not in our lifetime, I don't believe. But I would love to at least see a true audit of the Federal Reserve, and a true audit of Fort Knox, and a true audit of what our actual assets are. Because if you look at the Doge program and you look at the money that has been spent, I mean, there was a direct payment going to the Wuhan labs who brought COVID in. So I'd love to see all of this corrected. I don't know if Trump's got enough time to get it all done, but if we can get on the right path, okay, I would think it would be a lot better for all Americans, not just libertarians like you and myself, not just Republicans, and not just Democrats. I think everybody would benefit if they would actually go into some normal spending and quit the bailing out and quit the overall spending, and let the free market determine, what interest rate should be, because you are too young for this. But when my first mortgage was 13%, and it didn't bother me at 13%, most people that are in their 40s or younger don't understand that these rates are right now are historically low. So guys like me would go out and borrow every dime that I could because I can return more before the reason raises. I could return more money on investing it than it cost me to borrow.
Now, when it comes to, I guess, the fiscal situation in the U.S., we've talked about this before, but I think something that has slightly changed since last time we talked is, actually the implementation of tariffs. And it's not just, Trump saying that we're going to put tariffs on things. It's actually, it really looks like this is happening now.
I'll go. Rip them.
Yeah. Well, so my question is, a lot of people have argued that, the main spending aside of what the U.S. government spends on the Medicare, Medicaid, military, those main big ticket items can't just be cut by the DOGE committee, right? But I guess possibly the U.S. could get its fiscal situation in check if they were able to increase revenue, right? So there's kind of the spending and then there's the revenue side of things. If they're increasing revenue by tariffs, do you think there's really any hope of, bringing down this debt or at least getting it under control?
Well, I think that's a very loaded question, number one. But number two, I think it can be done. I'm all for tariffs. I mean, we had tariffs until 1962. Okay. I don't think tariffs hurt anything. I think actually tariffs benefit this economy. Because if you force people back into business in our country, okay, that brings in jobs, money, business, and industry, and we quit supporting the rest of the world, which I'm sick and tired of doing, quite frankly, okay? I would personally like either North America, if we can work out with Mexico and Canada, or the United States of America to be an island. We don't need anything from anybody, okay? And I'm sick and tired of all of our money outflowing elsewhere, okay? And again, when you go back and you tie it back into, can you cut Medicare? Well, you could cut Medicare, and I don't mean cut it now, but if you were planning for it, the whole Social Security system, Medicare system, everything that was put into place was based on Social Security and an average living age of 62, which is me, and they allowed retirement at 65. So the Ponzi scheme they built actually worked for the time being, because when more people were dying at 62 and you couldn't collect until you were 65, it kind of worked out. The government was still using the money, but there was always kind of enough left over. I mean, it still was a Ponzi scheme, but now there isn't enough workers, okay, to pay into a system when people like me are collecting Social Security, okay? I have no business collecting Social Security, but I paid into it my whole life. I'm taking it, okay? But the true retirement age should be 78 to 80 now, because that's the average living age. So what should be done, and maybe Trump will get to this, starting if you're 21 years old or younger, your retirement age will be 80, okay, or 82, because of course they're projecting people living well into the hundreds. This is something that should have been done years ago, okay? And of course, Social Security has got a $29 trillion shortfall coming in the next 8 years. Okay. Think about that number. And again, that would also affect Medicare. Okay. Because the doctors and the hospitals steal from Medicare like they were printing money. Because listen, I'm on Medicare and I don't pay anything. And they keep ordering up all these tests. I go, I don't want these tests. I mean, my mom's 96 years old. She goes, well, it's paid for by Medicare. I said, that's not the point. I'm paying for you. Well, I'm not paying for you anymore, but I used to pay for that for you. And it shouldn't be that way. All of these programs should be pushed down to later ages. You can't do anything for somebody who's in their 50s and say, well, no, you can't get to your 80. But you can start at 21 and below and say the new retirement age is 82 or 83. And then you would start saving money because the rollover wouldn't happen so fast.
So I think those are, very encouraging things that are happening right now and possibly could happen in the future with respect to the fiscal situation. Now, you've discussed on our show before concerns regarding the banking system as well. Now, given that Scott Bessent is the Treasury Secretary and maybe auditing the Fed and everything we talked about at the beginning of this interview, do you see any hope for the banking system? I know what kind of crisis do you still see happening?
I think the banks are going to melt down. This is my concern is we're going to see basically a repeat of '08, okay, because the banks are well overleveraged, okay. And of course, unfortunately, you and me, the taxpayer, are going to have to pay for it again. Now, see, I go for, if the banks collapse, let them collapse. I don't care. You should not be bailing out a failing business. You bail out the depositors that are in that bank to avoid the run on the bank. You let the depositors know your bank's going out of business, but your money is going to be guaranteed by the government and we're going to pay you. So instead of going and bailing out the banks and letting them make a fortune through the bailouts once again, let's just take care of the depositor and let new banks come in and new our organizations come in. I mean, look what they did with the savings and loans in the 80s. Okay. Again, if you're a bad bank and you're over leveraged and you can't make payroll, go out of business. The government, instead of bailing out you, the bank, and all you guys, so you can make your billions of dollars. And I got no problem with billionaires, but I do have a problem with people that are in a business that has no risk of failure. Okay. That I have a huge problem with, right? You fail, you go out of business. That's the way it should be. You should not have the Federal Reserve backing you up, allowing you to be very irresponsible with your lending policies and what you're doing, okay, and then allowing to bail you out if it doesn't work out.
So it sounds like maybe for our viewers to consider getting their assets, at least some of them outside of the banking system. And if they have cash in the banking system, make sure it's a bank that's going to withstand this change.
Well, I mean, again, I don't know if they'll change it, but I'm not worried about, again, the money is guaranteed as long as you follow the laws, right? It's, FDIC. So again, there's X amount of dollars, but you better have it spread out. If you have more than what is guaranteed, it should not be in one bank. That I will tell people that you better be careful of. This is what happened with the bank in California, the small bank that actually had all these depositors and they made it good. Why they made them good, I don't understand. Why did the government back that bank up? I don't know. That's, to me, is a problem. Again, you're a capitalism system. Business builds. You fail, you're out of business. Okay. In the banking's case, they fail. Bail out the depositors, not the business itself. That's what I say.
Right. Well, Todd, we really appreciate your time today. If our viewers are interested in learning more, they can go to the description of this video, our affiliate link there. So signing up for your trading program, Bubba Trading, will help Liberty and Finance out along the way. Can you tell us a bit about that?
Yeah, I've been educating, I was a floor trader for 30 years, but I've been an educator for 15 because there's no more floors. So, but we love to teach. I teach people how to hedge their overall long-term portfolio. I teach them how to trade on a short-term basis and do a lot of things with options, with all kinds of derivatives. I trade every market there is. In fact, I'm trading today, even though the markets are closed, they're still open electronically. But again, want to give you an education, teach you the discipline, the psychology of the market. And, for all your listeners too, Elijah, I think I've done this before, but, I've written 2 books on option trading. And if they want them, they can just go to that affiliate link and it'll pop up and they can get a free book as well, which they're very well detailed and how to trade and what you're looking for when you're trading in this market or investing in this market.
Fantastic. Any last thoughts before we let you go, Bubba?
I just think be very careful here. I think that we are on the very precipice of a major meltdown. I've said this for 18 months. So again, this isn't new, but typically I wouldn't expect it until, mid-second, third quarter. But watch what's going on because a lot of the power stocks are starting to get weak. Okay. And a lot of the semiconductors, which has been the leader in these markets. And if the Dow continues to outperform the rest of the markets, to me, that spells trouble.
Fantastic. Todd, once again, thank you so much for your time and God bless.
Thanks, Elijah. Have a great day.
This is Kaiser Johnson with Liberty and Finance. Right now, you can swap any uncirculated 1-ounce gold coin or 1-ounce carded bar for an MS62 $20 Liberty or St. Gaudens with no extra premium whatsoever. Just ship us your gold coins or bars and exchange them for MS62 numismatic Liberty or St. Gaudens at no extra cost. Call us for details.